Robert Omontode, who is the head of research at Afrinvest, an investment and securities firm. Let's get back to the markets. This week is going to be really, really heavy. And we started the show right from there, where we expect system liquidity opening today around 22.82 billion. That's a deficit. Now, what will happen this week will mean a lot to what the interbank lending rate will be, where we finished 15.23% on Friday. At the equities market, analysts say they see reduced apprehension in the macroeconomic environment, perhaps with the new ERGP. Get used to that acronym because it's going to stick with you till the year 2020. That's what the new economic recovery and growth plan means. So write it somewhere. Don't forget, it's called the ERGP. That's the document the Buhari's administration has published and says it's expected to make Nigerians recover from the current economic downturn. Interbank lending may head north this week because the central bank will likely continue its rapid fire at the FX market, injecting more liquidity to cool down further naira-dollar relationship to somewhere below 400 to the greenback. Look at the interventions we're starting with. 126.9 billion naira open market. Market treasury bills will be maturing on Thursday. Bills matures on Thursdays. But Wednesday, which is the day after tomorrow, the central bank will be doing a primary treasuries auction about 170.51 billion. If you do a simple math, what you'll be left with on the market will be really a bit of negative as well. Then you have the Wednesday DMO offering 130 billion, 3 tenors, July 2021, March 2027, and March 2036. So put all that together in your trading box, and let's talk further on this during the rest of the week. We're going to talk about the world of mining business when we come back after the break. It's going to be a very busy business week. These are some stories making the headlines in the world of business. Central Bank of Nigeria and the communications regulator, the NCC, has saved telco Etisalat from receivership by some banks, aiming to protect 23 million subscribers of Etisalat and hold investors' confidence steady in the telecommunication company. So Etisalat is now continuing as a going concern. Meantime, the power distribution companies, going by the acronym DISCOs, says, well, thank you to the government for the 701 billion power sector intervention fund, but no thanks, because they said they want a holistic intervention in the sector, which will include cost-reflective electricity pricing. And Linkage Assurance says there will be probable delay in filing of its 2016 financials with both the stock exchange and other regulators, and that includes both the SEC and the National Insurance Commission. Okay, let's get to the world of mining. Of course, that's one sector that the Nigerian government says is expected to be part of the diverting the economy from oil and to mining, agriculture, and what have you. So let's get a bit of a sense of where we are right now with this sector. Let's bring in Tony Wakala, who is a mining consultant and the chief executive officer at Sandco, and is joining us in the studio this morning. Thanks for coming.
Thank you, Bosun.
You were here about a week ago?
Yes.
Yes. So we're going to continue that conversation about the world of mining. Give us just a summary of that sector right now, where we are, what you see as a consultant and the chief executive of a company doing business in that sector.
Thank you, Bosun. First of all, I think since June 2016, I think when His Excellency the Honorable Minister released the roadmap for growth in the mining sector, we have experienced some movement, as I would call it, especially as regards trying to sensitize the players on what the things they need to do would be. But since the roadmap was approved by the Federal Executive Council, and that was like since November last year, and I think that the mining implementation strategy team that's supposed to be responsible for implementing the key salient points in the roadmap, I don't think we've seen much. It's a really difficult space to play because there's a lot of lack of knowledge and understanding of the entire mining ecosystem and the value chain.
Each time I look at it, at mining, it's like looking into the hard ground with bare eyes without being a geologist to find out what is under the ground. So the key question, therefore, is what is the problem with this sector, really? Is it money? Is it research? What exactly is it?
It's a combination of a lot of things, and the roadmap has identified all of the things. It was properly done. I must give the ministry kudos for that. Baines and Co, Deloitte, I think, and PwC put together a brilliant, exhaustive document and have given pointers to the government as regards how to make it work. You mentioned funds. Yes, I mean, since the oil and gas boom in ~56, we have experienced serious decline in every area of mining. There's no infrastructure because you need a lot of the ores to move through rolling stock. There's no bulk handling ports. We are not even on the Fraser's Index of mining jurisdictions. So even if you want to get external finance, there's nothing for international companies to reference. If you look at the MBS results that was released last week on mining, when you see that a whole country produces only 20 kilograms of gold, and we in the business know that that information cannot be correct.
One of the most disappointing data was that you just mentioned, and I have it in front of me here, that we haven't really touched the big ones. We're just doing limestone and...
That's all we're doing.
And granite and laterite.
And they're looking for...
And that's all we're doing.
And they're looking for foreign exchange. So guess what, right? It becomes really funny when you look at pound for pound, lead, zinc, and cocoa. When you look at pound for pound, barite and gum arabic, all the things that we export, there's no competition. And you also find out that unlike in agriculture, where you have plant and animal disease, you don't have any disease affecting us. So the risks are very low. Then look at how the payments are structured. For export of ores, it's letters of credit. So the bank has control of the transaction also, because there's confirming bank and there's the advising bank. So you wonder then, what is the challenge? When Nigeria has 5 gold fields and produces 20 grams of gold, one of two things is happening. It's either, because I know that figure isn't correct as a player in the game.
The figure from the Bureau of Statistics.
No, it's not correct. And the reason why these things have been happening is because they shifted mining to a state-owned franchise or enterprise since the days of Gowon, right? The indigenization decree. And there's a lot of capacity that left. The big players like Rio Tinto, like Vale, like BHP.
Left after the just around the Civil War.
And they're focused on DRC, Botswana, South Africa. Now, when you look at Nigeria, just looking at that report last week, you see there's 42 minerals being produced. No country has that. Just looking at that's evidence.
Not even South Africa has 42.
That's what the report says.
Yes.
42 with different levels of production. Then you're wondering, each one has a dollar price. Nigeria has the best quality coal, low sulfur, just like oil. You begin to wonder, what is the problem? There's now a roadmap. So I'll tell you what the problem is. The problem is the government, the ministry doesn't understand the business, I think, as they should.
No, that's heartbreaking. Just hold on there. Put a stop.